Obviously, the president there rebuffing the use of the word recession, and I suppose trying to recalibrate the mindset, because we have gone into frenzy mode over recession. How worried is the NatWest Markets desk of recession in the United States?
I think today we're not super worried. The fact is, if you look at the data in the U.S., it's been relatively strong. But listen, it's very late cycle. This is the longest cycle in history, and this rise in protectionism is a slippery slope. So I would say we really need to be worrying about it in 2020, but certainly not in 2019.
You say in your note that the risk is that the Fed could be behind the curve, and that the markets desk that you speak to, they want aggressive action. The risk is, of course, this week that Jay Powell doesn't, I suppose, deliver on the narrative that the markets want. The markets want 50 to 75 basis points. The Barclays note this morning talking about another 3 this year. Is that the biggest risk? A Powell failure to launch, failure to match expectations?
Listen, I think it's a very big risk. It's been the story all year. The Fed has been behind the market. Whether or not the market makes a lot of sense to have 75 basis points of rate cuts priced in, given the current economy, is neither here nor there. But it is going to be a difficult balancing act for Powell to meet the market expectations. I think that's going to be a big risk this week.
Okay, one of the things that came through very clearly from Mr. Hildebrand over at BlackRock and a number of others is the ability of rate cuts to do something substantial. But PIMCO flagged up the possibility of the rhetoric changing to fiscal stimulus. Let's take a listen.
There's a lot of corporate debt outstanding, and so it does make sense that investors are going into credit markets, but you want to be a lot more selective and defensive right now. The global economy is slowing, monetary policy has limits, and we're likely not going to pivot soon enough to fiscal policy. And so the reality is that risks have increased a lot, so credit investors need to be more defensive and selective.
James, I started the narrative this morning by saying, Trump hinting that you might need a payroll tax, but we're not going to do it yet. The possibility of a capital gains tax. Again, the narrative seems to be mounting from a fiscal front in the United States of America. Is that the new alpha to the momentum for markets to save us?
Yeah, listen, I think that the U.S. has been using fiscal policy pretty aggressively for quite some time now. It actually surprises me that we're even talking about it, given the U.S. has the largest structural budget deficit since the 1960s. What we really need to see is fiscal policy in Europe. And I think we're starting to see hints of that, but we're not quite there.
Well, why do you think, goodness knows why anybody knows what goes on in the minds of anybody, but why do you think Trump's sort of leaning into tax? I can do something without Congress on capital gains tax. I can look at payroll taxes. You would say that is not the solution. That's not the solution in the United States of America to sustain the economy.
No, listen. I think that the key point is the U.S. is in a situation where it doesn't have a lot of fiscal room and has a lot of monetary room. Europe is in a situation where it doesn't have a lot of monetary room, but it has a lot of fiscal room. I'm not saying that a payroll tax cut wouldn't be helpful. The problem is, in the U.S., you do already have a very large budget deficit. So there's only so much room you can go on the fiscal side. I think the point that Trump is talking about it shows you that the administration is getting very worried about a recession in a presidential election year.